Market Sit Rep. My name's Matthew Buckley, call sign Whiz, one of the portfolio managers here at Top Gun Options, and obviously seeing the market give a little bit back from yesterday's rip your face off rally on the fiscal cliff, quote unquote, resolution, if you can call what happened a resolution. Markets tend to do this. Markets do not like uncertainty, right? Volatility increases, and markets just don't like that. When we get a resolution, if you can call what happened a resolution, the markets are going to rally because at least they have some clarity into what's going on. Even though I believe the deal that was passed is going to be devastating to the economy. All Americans are going to who get a W-2 immediately see a 2% tax increase with the payroll tax expiring. We're getting an Obamacare tax. Most taxes on about 77–80% of Americans are going to go up. There's only about $1 in spending cuts for every $44 in tax increases. And the CBO, the Congressional Budget Office, obviously an independent agency, says that this deal is going to actually add nearly $4 trillion to the deficit, which is just, we live in bizarro world. The president ran on deficit reduction and getting our fiscal house in order, and more or less the deal that was passed makes us look like Greece, or actually worse than Greece. So obviously not good overall for our economy, but the market is going to take it. I mean, yesterday we just had a banner day in our model portfolios. Great way to begin the trading year. Matter of fact, we had a very bullish double vertical trade. Double vertical can be either bullish or bearish, and I call it an afterburner trade. Essentially, your strategic mindset, you really believe in, and we had a double bullish vertical. It was a bull put spread and a bull call spread on top of each other on the SPX. Places trade a couple weeks ago on my belief that we'd see some sort of resolution to the fiscal cliff, and the trade was up over 1,100% yesterday alone. In one day, trade was up 1,100%, showing a profit of about $3,000 on that trade, and we're probably going to get out of it today because, as I said, we're moving sideways right now. The market, obviously, after a rip your face off rally like that, is going to give a little bit of it back. But I also believe yesterday we saw part of the rally was just new money coming into the market, right? Fund managers, private wealth managers, large institutions that did some tax selling at the end of the year, and also profit selling at the end of the year, obviously had to get back into the market yesterday. Here's the problem, though, is that now we have another train coming down the track in the form of earnings. And we also have the debt ceiling debate coming due in February. So as part of the deal that was the fiscal cliff deal, they essentially kicked the can down the road for 2 months. We've already crashed through a debt ceiling, folks, or our borrowing limit we've already gone through. Officially on January 1st, we're over our credit limit, right? But when you print your own money, I guess you can be over your own credit limit. So the debt ceiling debate is going to happen, and if you recall what happened in August of 2011, the last time we had a debt ceiling quote-unquote debate, the market imploded, right? So 2 years ago, let's pull up a 2-year chart of the SPX and take a look at what happened. Here we are right here. July 29th, SPX around 1344. Debt ceiling debate. Republicans dug their heels in. The president dug his heels in, and the market went down to about 1120s. And obviously, let's overlay volatility on top of this. And I want to compare the SPX with the VIX, and let's see what volatility did during the last debt ceiling. I'm not even going to call it a debate. I'm going to call it a debacle. So look at that. As the market went down, the SPX went down 7%-ish, 11%. Volatility rose about 140% relative to the SPX. Absolutely incredible. I think that's going to happen again come February. So while I remain somewhat bullish with new money coming into the market in January, as we've seen for the past 3 years, so let's get rid of this and let's take a look at the past. Let's take a look at a 5-year chart of the SPX and see the January effect that we've seen for the past 3 years. So there we go. There's 2010, January, February, nice rally. 2011, January, February, nice rally. And 2012, January, February, nice rally. So what is different this year is that come our February, we have this debt ceiling debate, and we also have the sequester that was kicked down the road, the defense cuts, the automatic cuts that are going to kick in for a lot of agencies in our government. They kicked that can down the road. So we're not in the clear yet, folks. So, and as I said, we also have earnings coming up. Alcoa is coming up next week. And Alcoa unofficially kicks off earnings season. So we're in for some volatility here. So don't think for a minute that the all clear was sounded yesterday. Okay, this is a great market to be trading options in because there is still a lot of uncertainty, still a lot of things up in the air, and we have a lot of economic data actually coming out that came out this morning and coming out tomorrow. So what happened this morning? ADP numbers came out looking pretty good. Non-farm employment payroll up at 215, and these numbers from last month were actually revised up from 118,000. So at least ADP, private organization, folks, private company, not the BLS, the Bureau of Labor Statistics, which actually reports tomorrow the quote-unquote real non-farm payroll numbers and the unemployment rate. Now, the unemployment rate was obviously a political football in the fall around the elections, but now the unemployment rate is really going to be watched by the markets. Why? Because the Fed and Bernanke have changed, giving the markets a blanket, we're going to keep rates low for an extended period of time, quote unquote, or buying mortgage-backed securities and treasuries to keep interest rates low. And they've boosted that up to $85 billion a month, and their balance sheet's swelling up to $3-4 trillion as well. Separate story, folks. But the market's going to be looking for unemployment. Once unemployment gets down around 6.7%, the Fed chief has said, "Hey, we're going to start unwinding everything we're doing," and he's already telling us what he's going to do, which for traders is like shooting fish in a barrel. We have a lot of GLD positions on, gold positions on that are just doing absolutely phenomenal based on the Fed's in my opinion, un-American policies, but I digress. Also, tomorrow we're going to see average hourly earnings. How are workers doing? Are average hourly earnings increasing, decreasing, staying flat? Seeing some PMI numbers and also factory orders. So tomorrow, Friday, last day of the trading week, of this shortened trading week, we're going to see a lot of potentially market-moving data. So again, rip your face off rally yesterday based on the resolution of the fiscal cliff, but stand by because we're not out of the woods yet. And like I said, here at Top Gun Options and Wealth Creation with options, we're having an absolute blast trading the heck out of this market. Trading volatility. Had very, very bearish trades on. So we had a pairs trade on, essentially. We had very bullish trades on the SPX and very bearish trades on volatility, saying that the market was going to rally and volatility was going to come in based on this fiscal cliff resolution, and it did. And seeing just massive profits in our SPX positions and our volatility positions across a lot of our portfolios, weekly options, trade alerts, and also our live trade briefing services. Okay, so folks, I got to get busy trading, managing a lot of our positions in our model portfolios. Got to get some trade updates out to our readers, and it's going to be an interesting January, folks. So if you want to see how we're doing things here at Top Gun Options, I strongly recommend that you go to topgunoptions.com and you can hover over the services tab and you can check out some of the things we do here. Our trade alerts and live trade brief package is a great way to take a test flight of our trade alerts and live trade briefing services, and we're going to have a great live trade brief tomorrow at 10 a.m. So I strongly recommend you go to topgunoptions.com/TA-LTB, and you can scroll down and take a test flight for 2 weeks with me and also one of our volatility arbitrage traders with our trade alert and live trade briefing services. Okay, got to get going. Happy hunting. Make sure you hedge, and I'll be back tomorrow with Wealth Creation Investing's Friday market wrap up. We'll see you.